read, for lack of a better word, is good. Read is right. Read works.
Hello everyone, and welcome to episode 17 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we had a nice windfall, went from 95 trillion up to 148 trillion. Most of that was due to the stock price rise on the insurance company and consequently on the index as well. We have a lot of cash personally, and then also we took a lot of excess cash and we put it into mortgages and subprime, prime and subprime mortgages. But we still have trillions of dollars on hand that we need to reinvest, and I'm hoping we can get started today buying some more stocks and expanding our portfolio. But first, I've gone through and updated my spreadsheet and put notes on all of the companies that we own as far as what we want to do with them, and hopefully we'll get further down the list today. We just got through the first 5 on our list yesterday, or last time, but hopefully we'll get through the rest of this list and then start adding to this list in additional industries. But before we do anything with our stocks, I noticed that silver is very low, and I want to see about buying not only physical silver but also some silver futures. Also, wheat is extremely high, and I would like to sell it short, but again, at this price with the new restrictions in place, I don't think that we're going to get very many contracts on it. So primarily with our commodities, we're going to be doing a lot of physical commodities for big money, but the price really has to be at the extreme to make it worth spending the time it takes to do a bunch of smaller transactions and get significant holdings in futures. But we are going to buy some silver here, so I'm going to do that. And let's see what we can get as far as futures are concerned. Okay, so at $13.80 or whatever it is, it's not considered a super low price, so I was able to buy the full amount. And I'm going to go ahead and do 4 more to get the total. Okay, the Contango price has gone up to $20, so I'm going to stop there. Well, just went down. Let's try it again. Okay, so our index just took a big drop, but $13 is not considered an extremely low price on silver, which is interesting. I think the average price is somewhere between 16 and 20. I forget exactly how much. So it makes me wonder what it considers an extreme price. Probably below 12 maybe. But if this drops below 13 again, we'll buy some more. I think I got about 25,000. Yeah, a little over 20. But anyway, we'll buy some more if it drops below 12. Mainly concerned with the Contango price not being above 18. All right, so in looking at our stocks between the episodes, basically we're not going to be selling anybody, although these two up here, Cabot and Dayton Hudson, because of the large cash extraordinary dividends that we did in the last episode, the target price on both of these has fallen below where they actually are now. So theoretically, at $8.12 a share, Cabot is actually ready to sell because we've taken more money out of him than we have invested. So we're already positive. It doesn't matter what his stock price is, we're going to make a profit no matter what we do with him. The only problem with selling him is that we will owe taxes on the portion that we've taken out beyond what we invested. So that's something like $1.5 trillion, I think. So selling him comes with a huge tax bill. Dayton Hudson is at 23.11 and his target price is only 9.44. And the only reason why we aren't selling these guys is because they aren't trading at that high of a price in terms of their net worth. So if we sell them now, yes, we'll make a profit, but there's still more profit to be had by hanging on to them. So the only thing that we have to be careful of is with Dayton Hudson and any others that are close, we have to be careful not to become a monopoly. So he's got 46.5% market share. PBR is at 49.2, and we've got them growing negative, and both of them have invested heavily in options on other stocks in their industries. And we're doing that to compensate for the fact that we can't really grow in either of those industries. We don't have any others really that are above 40%. We've got a couple are close. Iomega's close, and there was one other, although I don't remember what it was. Maybe I'm thinking of GE appliances, or maybe Toyota, where the industries are in kind of relatively good returns as far as the pre-tax returns go, but there's overexpansion going on in their individual industries. So we just have to be careful that when those companies overextend themselves, I think in most cases we have the credit for the competitors frozen, but even so, we have to keep an eye on our market share. All right, so anyway, what we're going to do is we're going to work the list starting with Nomura and working down. And most of these notes, if you are a frequent watcher of the series, you know what they mean. But for those who haven't, MS is just to adjust the management settings. BC is buy competitors. BO is buy options. ID or IG and anything starting with an I is increase. D would be dividend. R would be R&D. G would be growth. On NT, we need to split his stock and then reset the management settings. What else? BA is buy assets. So here there may or may not be any competitors in that industry to buy, so we're just going to buy flat out assets. And that's especially important for Alpha Industries because we have shorted 3 stocks in the semiconductor industry and we're currently losing money on them. We're not losing a lot of money, it's less than 10 billion. But what we did was we bought a bunch of assets, new assets, when we bought Alpha. And the returns went down, but they're on the way back up now. We either need to buy some more assets or increase his growth rate or a combination of the two. And make sure that these stocks that we've shorted don't end up losing money on us. We want those stocks to lose money, but we don't want our short positions to lose money. All right, so let's start with Nomura. Okay, he had a huge windfall due to profits in the index, and now he's going back to his more regular earnings, which are still way up. He's reasonably competent, and yet we're spending 20% on marketing. Got a bunch of cash, none of which is invested. Let's have him buy physical silver. He doesn't have enough money to buy the full amount, but I think we can buy about 20,000. Doesn't tell me how much it is yet. Okay, so that's just a bit too much. Let's buy 150,000. Or not, I mean 15,000. Okay. Now let's take a look. We wanted to reset the management settings here. Reasonably competent, so we don't need to spend 20%, but we want to be at least 1% over this guy for 14 then. The demand's at 6. We're growing at 6. Let's double that to 12 because this guy's not growing at all. And let's increase our dividend to 2%, which would be 460. And then let's split him. And now let's split the stock. Okay. That's all we need to do for him. $12.95, so I'm going to buy some more futures. All right, let's stop there because it's up to $13.85 again. And lots of money on our stock index, but that will go back up once we start spending some cash on new investments. May suffer for the next quarter or two. All right, so he's done. Let's go over to NBC. Very capable. The industry is deteriorating. He's got plenty of cash. And we have a couple of competitors down here that we can buy up for another 7% of the market. Bring us up to 35. Our return is excellent. But the main thing is that will increase our earnings, right, which are already up, but we want that to continue. So what we're going to do is we're going to buy these two fellas, WB here. Which is ready to buy and yet he's unowned, so let's buy him. And we're going to end up spending like $12 billion on him. Let's buy back these bonds. All right, so we still have $15 billion to work with. We'll buy this one. Kind of incompetent, but our rating should be predominant. All right, so we're still reasonably competent. So now let's reset our management settings. Let's increase our R&D to 10%. Let's grow at twice this rate of 10 and make it 10%. And let's give ourselves a 2% dividend or thereabouts for $1.70. And let's split him. Okay. Earnings still going up. We have a 37% market share. Still have $10 billion in cash. And our target price on him is, well, we have to adjust this. Let's see. Here, I'll just show you real quick what I go through on everything when I'm updating in between episodes. What I do is I plug in the market share here, number of shares, which now is 9,000. Tax cost basis should be the same because we used his money. And then I plug in the number of assets over here as well, 4869. And that tells me what the size of the entire industry is. But in terms of the target price, all I need is the number of shares and the tax cost basis. So his target now is 82.89. I guess we way overpaid for him, or at least GE did when GE bought him. We paid 23. Currently only, or excuse me, that's GE Appliances. We paid 150 billion, and he's only worth 250. So we still got a ways to go before we make 5 times our money. But he's currently trading at 3 times his net worth, I think, or close to it. 2.5 times anyway. All right, so he's done. All right, so Mitsubishi Electric, his earnings are going up. He's very capable. The industry is improving. But we have kind of a large market share here. We're not the biggest. Okay, and we've got HP down here too. We're going to sell him off. He's trading too high to buy the stock, and he doesn't have that much in the way of assets. We're going to have the bank sell it. But see how high our return is? I mean, it's just phenomenal. And what we're going to do is we are going to slow down our growth rate and just buy options on all the biggest guys. So Samsung, Pioneer, and if these 3 have any public stock, we'll buy them as well. Let's take a look. Okay, so we can do that one. And Mitsubishi has plenty of money to work with. So we're going to basically just buy options on those 3. And I'll fast forward while I'm doing that, and I'll be right back. Okay, so we bought 100% options, call options on these 3 of our friends over here. So now we want to do all we can to make sure that their stock prices go up. So that means we're going to drop our growth rate down to 1%. We're We're going to leave our dividend where it is, and as far as our R&D is concerned, we're very capable, so 6% is fine. Let's just drop our growth rate, and that should help the returns. And while ours is great, we don't really need to expand. We've got a big enough market share. We'll just make money off of the rise on these other three. And we could probably look at doing TSB as well. See what kind of shape he's in. His income is flat but going up. So let's buy options on him too. I'll be right back. Okay, so now we have options on 100% of Toshiba as well. And basically we're just looking for all of these companies to grow up. Notice I did not buy Sony Entertainment, which has a C credit rating, and the rest of these are too small. We're going to sell off HP, which I think I said before. But anyway, that's all we're going to do for him. So he is done. And that, by the way, is the last one where we're gonna buy options. Want to make sure that we still have enough counterparties in the market, so that when we run our experiment, we won't have too much trouble finding counterparties. And these are all, see all these counterparties that already exist. We need to make sure that there's still some left when we want to run our experiment later. I don't know that we're going to get to it at the end of this episode or not, but hopefully we'll get to it in the next one at the latest. Alright, so let's go over to Toyota America. All we're going to do on him is increase the dividend. We're already growing at a huge rate. We're very capable, and we're just going to make this 2%. Let's raise it to 40 cents, 42 cents. And all that's meant to do is to help his stock price climb. All right, go over to Time Warner. Now we're not just going to increase his dividend, we're going to relocate him. Time Warner right here. His income is edging down, but he's very capable. He has no debt, and he's got a little bit of cash to work with. There's nobody really of any size to buy. So all we're going to do is we're just going to increase his dividend, and then we're going to relocate him under one of the insurance companies. And Tokyo, I think, is the one with the fewest stocks. So we're going to move him over to Tokyo. So let's make his dividend 21 cents. PBR is a target for antitrust. All right, we'll have to make sure that he is under 50%. He's got 49. They can sue, but they probably won't win. Okay, so let's go over to Tokyo. Got plenty of money, and we're just going to buy Time Warner from the bank. With $100 billion. Okay, so he's done. Over to Nortel. Nortel, I don't know how he made this much money that quick, but he's still making money like gangbusters compared to last year. And We need to split him, and we also need to adjust his management settings. So let's split him to begin with. Okay. The growth rate here is 12%. Here's Bank of RakeM. He lost money. What he lost money on? Did he have to write off loans? Anyway, here's Nortel. He's reasonably competent, and the industry is improving, despite the fact that this guy on top is growing at 26%. So given that we're reasonably competent, we can bring our R&D down to 12%, increase the dividend, and let's grow at 20%. And we'll make our dividend 64 cents. All right. The industry is now deteriorating. Let's take a look at Huawei Networks and see what kind of... Okay, so these are counterparties. Making money on the index right now, but that's going back up now. So hopefully we'll make that back, and he will hopefully run out of cash and have to slow down his growth, because I think we have him frozen. We do. He can't borrow money. He's also got options. He's losing money on all of those. Hopefully he'll have to slow down his growth rate here shortly. Okay, UTX. There's a lot of money in this industry, and we are not a major factor. You know, I mean, we have 20% of the market, but we could go a lot higher. So what I want to do is I want to buy McDonnell Douglas. Whatever this one is, and Rolls-Royce Aero. Yes, he's probably owned. I don't know if we can get that one, but I want to buy these other two. This one's going to run us 10 billion plus another 13 in debt. And we've got more than enough. Let's see. This is just all the regular stuff, so that's fine. Buy 100%. Liquidate him. Let's buy back the bonds. Mitsui made a lot of money. Over $1 trillion. Okay, so UTX is now the number one. And we're going to buy this fella here, the salt. Tokyo, 330 billion, but over $1 trillion after extraordinary income. Right, and Progressive, which we don't own 100% of, but will shortly, is doing well also. All he's got is bonds. He doesn't own any stocks. So, all right, let's see what we need to do as far as the management settings now that we've done all that. We are spending a ton on R&D. Our dividend's too low, and we're only growing at 1%. Our management is reasonably competent. So let's back our R&D off to 12%. That's the wrong button. Here's the earnings report for RakeM Insurance. Over $1 trillion. Close to $2 trillion total. And our stock price should go up a little bit, and hopefully the index will too. All right, so all we have left to do is just to increase the dividend. Let's see how much of this guy is owned. He's majority owned. So let's make our dividend $3.30, and then we'll split him. I think that's it for him. When we reach very capable status, we'll drop our R&D and increase our growth rate. All right, LinkedIn is next. Did I see that right? His income's going down. Okay, still up from last year, but headed down. Okay, so here we only have a 16% market share. And my notes on him say just to increase the dividend. Seems weird. I guess it's just because of how much extra cash he has. Oh, we need to go back to UTX and take care of his excess cash too. Increasing the dividend, is that all we really want to do here? I guess so. We'll just hang on to our cash, and when our management's reformed, we can buy new assets. So our management's currently mediocre. All right, so let's make the dividend 82 cents. And let's go to UTX, and we need to disperse. I want to keep 26 billion on hand and disperse the rest, so we're going to disperse 174 billion. All right, we picked up the biotechnology company. Networks. Here our income is going from negative to positive, and this guy is reasonably priced. Going to be 18, call it 20 billion, plus another 22, 23 to pay off the debt, and we don't have it. So we need Tokyo to give him the money. And we're going to give him 30 billion. And now we'll buy and liquidate SAP. We just picked up Clayton Homes in a bankruptcy, and we've immediately got this notice. Sunbelt Land Division, possible problem with Rancho Mucho Dinero project. We have good news and bad news. The good news is we've completed building out phase 1 on schedule, under budget, thanks to the absurdly low price we paid for the land. And some 450 homes are now ready for sale. The bad news is that a number of the construction people working on the project have died of odd and unusual forms of cancer, and we've just found out that the site was formerly a hazardous waste dump, which could cost us a fortune to clean up after we demolish all the houses. However, no one but us is aware of this little secret, so we still have the option of going ahead with selling the housing units. We're certain to take exceptional profits. If we do so, we will take a $10 million loss if we cancel the project now. Do we proceed with sales of the houses? Now, we've said no to every cheat scenario up to this point, and I see no reason to waste our karma on something this little. So I'm going to say no and let him eat 10 million bucks. Why are we liquidating mortgage securities? Alright, let's go look at the bank real quick. Did we let him run out of cash? We did. Alright, so let's sell off some more subprime. Sell off 350 billion. 6% discount. Okay, so we're still getting that on subprime. Let's sell off prime. And let's sell off 1.2 trillion. Okay. Good to know that he's selling off mortgages before any of these other things, though. That's what we want him to do. Okay, so where were we on Real Networks? I forget now. We just bought SAP and got our market share up to 30%. Our income's going up. We're mediocre and we're spending a ton on R&D. But the industry is improving. Okay, so we need to buy back bonds and pay off the loan. Is Real Networks not using RakeM as their bank? No, he lost money? Why is he losing money? Okay, we gotta go look at PBR. Alright, since we have no cash on hand, I guess 0% is just fine as far as the growth rate's concerned, until we can reform our management. Let's reduce this to 21%. You get basically the same benefit as long as it's 21 or above. And we are done here. Now let's go take a look at PBR and see why he's losing money. Supposed to go back up. We've got him growing at -10, I thought. So why would we be losing money? All these are down to where they can be bought again. Let's have PBR buy some silver. Rated to buy. Management's incompetent, which is why we're spending this. We're growing at 0 because we have options on these other guys, and we're making money like crazy on those. Most of them anyway. Mobile being the exception. I don't know. What did we take the loss on? It's only 11 billion, but still. Alright, I don't see anything to really be concerned about there. So, let's go down to Mitsui. His income is up and kind of flattening out, but he's still in decent shape. Here is kind of stagnant. The note says to buy competitors. So this one. Is that it? I think there was another one. I guess we could buy him. He's not a bargain, but we could buy him. Let's see how much cash we got to work with. $6 billion to work with. Very capable, so we can change our R&D down to 6. Let's see how much this one is. He's going to be $6 billion. Very capable. All right, let's leave our growth rate the same. Increase our dividend to $1.68, and then we'll split him. When he earns some more money, we'll take a look at him again to see about buying another one. All right, Fujitsu. His income is going way up. We're not number one, and this industry really doesn't have a leader. Nobody's really priced to buy except for Chrysler down here. Excuse me, Citigroup. But he's only got 80 million in assets. He's got stock in subsidiaries that we're really not interested in, so we're not buying him. With the returns this high, we can just add new assets. Let's see, we are reasonably competent. So let's buy another 10 billion in assets and then adjust our management settings. Okay, so this is some crazy growth here. Demand's only 1%. Let's reduce our growth to 5%. Let's make our dividend 90 cents. We're reasonably competent. These guys are spending a ton on R&D. I don't really want to compete with them at that rate. It's just kind of crazy. Let's make our R&D 8%. And let's see if we can slow down IBM. Of course, with a BB credit rating, he's going to have to slow down pretty quick anyway. Mitsubishi Electric is up. Even beat the last minute estimate. Hewlett Packard's down. Alright, let's see if he's frozen. He's got more debt than equity. And he's frozen. He can't grow. He's got some he's got some cash on hand to do it with, but he would be better off paying off his debt than he would to be continuing to expand. So I guess I'll just wait it out. All right, so now one that's important for us to work on is Alpha Industries. His income was up and going down. We're mediocre, and the industry is deteriorating, which is what we want. But the problem is that let me do it on the tax basis so you can see how much I'm losing. And this is what I spent, and you notice I'm losing just a little bit, like 1 or 2 billion on each one of these. And obviously I want to maximize my profit on both sides. I would prefer it if he was making money in the process, but the only way to make these other guys lose money is for us to lose money at the same time. So I think what we want to do is just increase the growth rate here. Some ridiculous number because we have cash. So I'm going to change the growth rate to 60%. And let's buy 5 billion right off the shelf in new assets. Hopefully these prices will come down and we'll start to make a profit on all this stuff. Okay, so that's done. And Iomega is up next. Your income is up and it's flattening out. Very capable. The industry is deteriorating. Got a little bit of cash on hand, but not a lot. And the market is way overexpanding. And as a result, we've got some competitors that we could buy, but we've got too big a market share. So, I think what we want to do is we want to start growing negative and then buy options on all these guys. See how big Toshiba is. He's pretty big. He's pretty big. Let's see what looks like buying call options on him. Alright, that's not too bad. I think what I'll do is I will fast forward and buy options on call options on all these guys, at least the biggest ones. And I will be back in just a minute. Okay, so I bought options on a bunch, but Mallinckrodt's up as well. And we also got the good news while I was doing that, Ashland Oil withdrew its antitrust suit against PBR. So we don't have to worry about paying legal fees for that. So here's our options. And they're already up. So what we need to do now is grow negative, so that these guys are assured to make a profit. So let's change our growth rate to a -10. We're very capable, so we can drop our R&D. Oh, at 6. Okay, that's where we want it. So we'll just increase the dividend to $2, and then we'll split it. Jitsu's up too. Right. And Toshiba's the one that we really want to go up. He's worth the most money. Obviously we want all of them to go up, but most of the options, the majority of the investment is in Toshiba. Okay, so Toyota Europe is next. And I think we're probably going to run out of time before we get to the bottom of the list here. But earnings here are still going up. He's reasonably competent. The industry is deteriorating. He's kind of small, but we have plenty of cash compared to his size. Growing at 8%, but the demand's negative. Note on him is to buy competitors. So I guess buy these little guys. We don't have enough cash to buy them all. We can buy a few. we've got 12% now. It'll be 14, 16. I guess we could get up to 20% if we buy all these little guys. So this is another 3 billion, so let's call it 12 billion altogether that we need. Right, so let's have Toyota buy the rest of Toyota Europe. And give him $12 billion. Now he can go about buying the rest of these guys. So starting with Lada Motors here. Let's close out these options. What kind of option was that? So he's got to buy it back. That's what it is. And that works us up. One more. He's owned. Let's see how much. He's wholly owned. So anybody else? That's it, really. If we wanted to be really ambitious, we could buy Fiat, but his return's so low. I really like the idea of doing that. So we are reasonably competent. We're only spending 10%, and these other guys are spending more. So let's make our R&D 18%. Leave our dividend alone. We'll lower our growth to 0. Okay, that looks good. US filter is next. We got a big windfall, and it's going down but still up from last year. It's reasonably competent. Industry is deteriorating. We have a 23% share. We have 11 billion in cash. We're not the market leader. The market leader is Donaldson. He's going like gangbusters. How can he grow that fast? He can't grow that fast. Donaldson has options that he's losing money on. He's got no credit because we froze it. And his dividend's way high too. I don't see anything we need to do here except increase the dividend. Let's make his dividend. Ordinarily I'd make it $4, but he's not really earning that great of a return. So I'll just make it $2 and we'll split him. We've got a lot of cash, so we could make it, 2%, but I'll wait and see what Donaldson's doing with his growth rate. All right, Mallinckrodt, we need to split him and adjust his management settings. Not a market leader here either. Up our R&D if we're not very capable. We're very incompetent, so we need to make it at least 16. Let's make our R&D, let's make it 21%. Got plenty of cash on hand. Returns in here are pretty good. We could add assets if we were at least reasonably competent. So for right now, let's just increase our R&D to 21%. Make the dividend 32 cents. And we'll come back to it hopefully when he's got a better management rating. Okay, and that just changed. We'll just leave it. Fine. Let's go over to GE Appliances. Income is up. Reasonably competent. Got cash on hand. Market leader. The note on him is to buy competitors. But market share is pretty big already. I don't want to go crazy. We can just buy one of these. He's negative and he's negative, so I'm not really excited about buying those. Kenmore is probably owned by Sears. Returns in here are not that great. So let's buy this one. And let's see about increasing our management rating. Well, let's make our R&D 16%. Let's grow negative. And 1% on the dividends fine for now. So how much negative do we want to grow? Let's grow. Let's see how much he has in credit. Okay, so he's frozen. The only way he's going to grow at 22% is if he makes money on these options. So that's that's wishful thinking. So let's just grow a negative a little bit. Let's make it negative 4%. So 16, negative 4, and we'll leave that alone. There's gold's all the way down to 868, so I'm going to buy gold. But before I do, we need to check and see how much money the bank has. And he's got plenty, so I'm going to buy gold. Interest rate has gone up. Let's check policy. Still neutral. And it's not up a lot, it's just up a little bit, but still. Silver is slowly edging upwards. Okay, so looking at our run time, we're getting low on time, so I think we're going to end the episode here. We made it all the way down through all of our legacy stocks, and where we're at next is to go through all the companies that we've picked up via bankruptcy. They're all sitting at the bank, and basically what the plan is I'm going to buy Progressive Insurance from the bank, And any of these companies that we intend to keep, which is the majority of them, I'm going to buy those from the bank as well and move them to Progressive Insurance. Now, there may be a few exceptions to that, in that if the stocks are trading at too high a price compared to their net worth, we may instead buy another company and then siphon off these assets and create holding companies out of them, which I will buy from the bank at a later point to conduct our experiment as far as buying options on stocks that are rated as a strong buy. Hopefully we'll get through all of this, plus adding stocks from the industries that we don't have a stake in yet. And basically my plan is to get all the way down here to packaged foods. Everything below that is pretty small. So I want to have something in each of these industries. There's about 12 of them altogether. But we'll tackle all of that stuff next time. And I want to do the stock option experiment once I've bought all the stocks in these industries where we don't have a presence, so that we don't end up buying options on companies that we then want to buy, thereby settling the options before we're ready and messing up the experiment. So anyway, that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.